Hello everybody, my name is Lush Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending April 22nd, 2022. Looking at the indexes for the week, the TSX, Russell 2000, Oil, S&P 500, NASDAQ, and Dow Jones were all down. An interesting situation is that despite commodity price increases, the Canadian dollar hasn't increased compared to the US dollar. Our interest rates are higher than the US rates as well, which should drive up the CAD. The reason it hasn't gone up is because of sentiment and fear, where people want to put their money into a safe currency, and since the USD is the reserve currency, that's where it goes. There is potential for the Canadian dollar to go up if that sentiment ever changes. The outlook for Canadian real estate is the cooling of markets and flattening of prices as mortgage rates increase. This is becoming more and more apparent. The International Monetary Fund has cut growth forecasts for the world. The global growth is projected to slow from an estimated 6.1% in 2021 to 3.6% in 2022 and 2023. This is 0.8 and 0.2 percentage points lower for 2022 and 2023 than projected in January. This is primarily due to the war and sanctions. The IMF is also warning that global trade growth will decline. What Trump and COVID started, the sanctions on Russia and country and company self-sufficiency will finish. Note, it's a decline in trade growth, not a decline in trade. James Bullard of the US Fed has suggested that even a 0.75% hike is on the table for the next US Fed meeting, but other members talked it down and said they would be data dependent. On Wednesday, we had a report of the Canadian CPI inflation being 6.7% for March year over year, higher than February and highest since 1991. Some inflation is coming from supply chain shortages, for example, new and used vehicles, and high real estate prices, which are also being caused by existing inflation. The U.S. weekly jobless claims dropped to 184,000, slightly higher than expected. There is plenty to worry the market, and that is why we are having a down week or two. I made a list of some of the worries that are impacting the markets, and so here is a list, and a lot of them are interdependent. So starting off with COVID resurgence and the lockdowns they have in China. We have the supply chain issues which have been with us for the better part of a year. We have the inflation, the war between Russia and the Ukraine, high energy prices, the inverted yield curve, rising interest rates, underinvestment in energy, the recession, the possibility of the US Fed making a mistake and causing a recession, deglobalization with the loss of trade, and a new concept of just-in-case inventory, which is replacing the previous just-in-time inventory. So that concludes the thoughts for the week. Next week we have earnings continuing in the US and starting in Canada. So on Tuesday we have Alphabet, Air Canada, Canadian National Rail. On Wednesday, we have Boeing, Ford, Teladoc, CP Rail. Thursday, we have Apple, Amazon, MasterCard, Constellation Software, Baytex, and Whitecap Energy. The U.S. reports GDP growth quarter over quarter on Thursday, and also jobless claims. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.